Hello, everyone, and welcome to my hot take video. Today, we're going to discuss IRMAA. Let me share my presentation here. Okay, IRMAA, income related monthly adjustment amount. That little bit extra or a lot of bit extra in Part B premium that you might have to pay if your modified adjusted gross is a little high. So we're going to do a hot take on it, just hopefully 5 minutes. I might go over though, because there's kind of a lot to it. And we're going to talk about how to try to avoid it if we can and just be aware of it. So this is my disclosure page. Making you aware that I'm not a tax professional or a legal professional, and there's risk in the market and all that other stuff. Okay, what is IRMAA, income related monthly adjustment amount? So it's a surcharge added on top of your Part B and Part D premiums for higher income folks. It's based on your modified adjusted gross income, and it is based on 2 years prior. So the things that you do this year will affect your Medicare premiums in 2028. And if you go even $1 over the limit, you might hit some of those higher brackets. So we're going to talk about strategies to try to minimize IRMAA when we can. And IRMAA applies to you whether you're on original Medicare or Medicare Advantage, because we all pay for Part B premiums that comes out of our Social Security. Okay, so first, what is your modified adjusted gross income? So it's adjusted gross income, but it's modified. They add some things back into it, such as tax exempt interest commonly from municipal bonds. Your IRA contributions that you deducted are added back in. Student loan interest that was deducted are added back in. Foreign earned income. And the non-taxable portion of your Social Security is added back to calculate your modified adjusted gross income. It does not include your standard deduction. Okay, so these are the brackets. If you are a single filer and you make less than $109,000, or if you're a married filer and you make less than $218,000, your total Part B premium is $202.90. This amount goes up every year. And if you're even $1 over, so if you made 100, or I should say, if your modified adjusted gross was $109,001, you will pay $284.10 per month. For married folks, if it is $218,000 and $1, you'll pay $284 per month. Now that's per person. So you can see how careful planning can save hundreds or even thousands of dollars per year on Part B premiums. The highest band goes up to $500,000 for a single filer and $750,000 for married filing jointly. And the highest Part B premium is $689.80 per month. This is for Part D. Most people do not pay for Part D, but same brackets here. 109,000, 218,000 for single and married filing jointly, respectively. Going up $14 for the first band, 37, all the way up to $91 per person per month for Part D. That's the drug portion. What changed for 2026? Standard Part B rose to $202, $18 more than 2025. It goes up, like I said, every year, and the Part B deductible rose to $283. The first four brackets that I showed you on the previous screen are indexed, inflation index, and the top bracket will stay frozen until 2028. And the new tax law does affect a lot of folks because the standard deduction was raised and then held steady. And the state and local tax deduction increasing from 10,000 to 40,000 can affect you if you're itemizing. It doesn't affect Coloradans as much as some other states with higher property taxes, but it could affect you. So you should take a look this year. Everybody should take a look and see what their modified adjusted gross is looking like. 2 year cliff. So, as I mentioned, your Part B premium is based on what you did 2 years ago. So in 2024, your modified adjusted gross is reported. 2025, Social Security Administration reviews your return. In 2026, it's applied. So the important thing is that one big event like a large Roth conversion or a sale of an income property or even a primary residence sale or a big capital gain. So if we were to sell a lot of our non-qualified investments or even change the strategy in our non-qualified investments, that can trigger an IRMAA event for the future. So we want to be really aware of how close we are to these bands. I mentioned it's 2 years ahead. We want to be really cognizant of those large to-dos that I mentioned. And it's a cliff. So again, $1 over, and you're paying those premiums all year. So we want to coordinate the timing of these things that we're doing. And there is a possibility that if something happens to you that's outside of your control, that you can file the form SSA 44. Qualifying life-changing event. There's a lot of misconceptions about what qualifies. It is something that is outside of your control. So on the left, you can see what's qualified a recognized event such as retirement, work reduction, marriage. I guess that is within our control, huh? Divorce or annulment, death of a spouse, loss of an income-producing property because of disaster or theft, not because of sale, or a loss of reduction of pension income or an employer settlement, company bankruptcy. So those are things that you could file that form for and potentially get your IRMAA reversed back down to the correct level. Things that don't qualify, voluntary sale of stocks or real estate, capital gains distributions, inheritance or large cash gifts, Roth IRA conversions, high medical or dental expenses. That doesn't seem like it's within our control, but does not qualify. Voluntary sale of a business or second home, normal market fluctuations, lottery or gambling winnings. We wish that was in our control, right? Things to be aware of, though. So the overview, the takeaway here is that it's quiet, it's automatic, and it's easy to miss. So if you are 63 to 65 and you hadn't told us about some big financial event that could trigger IRMAA, let's schedule an appointment. Let's talk and see if we can get ahead of it at all. My calendar link is down there, calendly.com//JH advisors. Hop on the calendar, schedule a 30-minute visit or Zoom, and we'll look at it together. Anyway, that's my IRMAA chat, and I will see you all next time.